Thank you, Fazel, for the presentation. Just before I hand over to you live for the discussion, I would like to just tell the audience there's one or two things you can do. You can feed questions to us using the question box, which is if you use the red arrow at the top right-hand side of your screen, you can open that info box, and you can send questions to us in that in the space down below. Also, you might like to look at the handouts. We have 4 handouts, a couple from Marine Money, a couple also from Vessels Value. One in particular is of interest. It's the UAE fleet infographic prepared by Vessels Value. So thank you very much for that. With that, I'd like to ask all of the panelists to open their cameras and their microphones, please. And we will proceed with the discussion. There's Fazel, Douglas. Okay, everybody's on. So Fazel, over to you live, and thank you very much.
Great. Well, thank you, Kevin. Thank you, Marine Money, and welcome all the panelists. Following on from that very insightful presentation from Rightstart, I have several sets of questions that I've divided into 3 broad categories. One is on a global impact, the second is on a local impact, and there's some industry trends that I'd like to check with you and get your insights on. So in terms of the global, let me start with Doug. Globally, oil, in terms of Brent crude, has been hovering in the lower $40 a barrel range for the past few months. Do you believe that this is range bound now, or is a breakout expected? And if so, is a breakout expected up or down, or how do you see it? Can't hear you.
See, but I'm not anticipating it making great leaps. I think it will stick in the mid to low 50s and stabilize at about there.
Rahul, what's your view?
Tough one. I think we are already ahead of the the $40 number. We are closer to 50 today than we were closer to 40, and I'm kind of expecting the numbers to break, at least for the Brent, to break 50 probably in the early part of next year.
And Mark?
Well, thanks, Fazel. Yeah, similarly to the colleagues over here, around 50 to probably to 55, averaging by next year.
So in that sense, by the end of 2021, Mark, what do you think? Where are we going to see it a year from now? Mark? Mark, can you hear me? No.
Okay.
How about you, Rahul?
My sense is we should be looking at $55 per barrel plus minus $4 to $5 right around the end of 2021. I mean, while I'm upbeat for the prices to break the $50 barrier probably end of this year, early next, I'm not expecting any spike up anytime soon. And the reason for that is there's still a lot of storage inventories built in all the OECD countries. And my expectation is that it's probably going to take 2 to 3 years before those inventories are kind of depleted to a level that makes meaningful impact on the oil prices. So, it's going to increase a little bit, but it's going to be pretty much range bound, 55 plus minus $5 pretty much towards the end of the year next year. That's my sense.
And Doug, how do you see that by the end, a year from now?
Yeah, I'm inclined to agree with Rahul. That's about where the price level is.
Fair enough. Rightstart had mentioned about the pandemic and the acceleration in terms of the energy transition. Doug, staying with you, how do you feel? Has the pandemic actually succeeded in accelerating the energy transition towards greener and renewables? Doug, would you like to take that first?
Okay, sorry, I thought you were talking so. In a way, yes, I feel that that is the case. My rationale is somewhat driven by the fact that a lot of oil exploration, and not just if we step outside the Middle East and look around the rest of the world, most of the oil exploration happens. For example, you take the United States and you take even Europe, the oil exploration doesn't happen in their own countries. So I think they've gone, it's a turning inward, whereas renewables tend to boost the local economy as opposed to oil and gas exploration, which tends to boost somebody else's economy. So in that regard, I think that factor combined with what the gentleman from Rystad was telling us earlier about, the quarantine, people staying home, less travel, more comfort with online meetings such as we're having now have driven, in fact, to a degree, the renewables taking a larger market share.
Mark, do you believe we are accelerating the energy transition, or are we still dependent and moving slower?
I think moving slower in the sense that we've had recently also, I mean, the pandemic brought the economic downturn, and then it brought us the current oil price, which really affected the market. So national oil companies and international oil companies are looking at looking at zero carbon emissions sooner than later. But I do not think it accelerated as everybody would think. Maybe within 5 years earlier than the transition would have happened.
And Rahul, what's your perspective? You got it, one yay and one nay so far.
I am. I can probably sit in the middle. my view is as follows. I don't think that the pandemic has accelerated the energy transition. I mean, it has accelerated anyway in the last few years, and it's to do with the leaps and bounds the technology has made. And at this point of time, we have to really examine two different drivers for the energy transition. One is the availability of spare cash by the consuming economies. So whereas some of the developed nations have a higher focus on ESG and may allocate some of the sovereign dollars to the renewable mix, the developing countries and big chunks of Asia come into that. Where the population has to be sustained during this pandemic, the government's subsidies on renewables and also undertaking mega capex projects for renewables is not on the top priority right now. So if I look at that aspect, I would think that the pandemic has delayed the energy transition. That said, if I look at where the capital originates from, the countries, Europe and the US, with the oil and gas being out of favor, those dollars have to be deployed somewhere to earn some returns, and a part of it is going into renewables. So that's why I'm saying I'm kind of on the middle ground. It has neither accelerated nor it has fallen back. If I look at the overall global picture, it's working differently in different regions and different parts of the world.
I think it's safe to say that the transition is there, and whether the pandemic helped or not, that could be debated, but I think the inevitability of the transition is very much a reality. Now, with that transition in mind towards cleaner fuels, less the greenhouse gases, and the whole range of options that we have, some of the renewables are not very conducive to the transportation or the marine sector that we're in. I mean, it's great to have solar power or wind power, but it doesn't always work from a transportation fuel standpoint. Now we have an EPC contractor, we have a drilling contractor, and we have an OSV contractor. So for each of you, how do you see your company's move towards cleaner or greener fuels over the next 3 years? Are there specific plans in that direction? And which fuels would be the ones that would be the most favorably considered? Let's start from the contracting perspective of McDermott.
Yeah, so I mean, there's already been a lot of moves, not just within an individual company. They've got a very low sulfur marine fuels, which has already been imposed around the world. So that's that's one step. Over the next, say, 3 years, frankly speaking, the move to greener fuels is going to be in large part offshore. Speaking specifically on offshore, it's going to be largely driven by our customers. As they mandate those kinds of things, because at this particular stage, I think we all recognize that the greener fuels tend to be a little bit more expensive. Remodeling vessels to adapt to, say, LNG or electric driven as opposed to a combination. So I think given by where we're sitting today, we've got a bit of I would say a paradigm where we have a massive drive to keep the costs as low as humanly possible. It's a very competitive market. To make that transition to greener fuels adds a certain level of expense. So what we would be moving towards is the customers are going to drive it so you've got parity and you're not going to prejudice your commercial position to achieve a greener footprint until it's recognized as something that is desirable in the competitive market.
Rahul, how do you see in terms of a drilling contractor?
I'll just echo what Doug has just mentioned. It's exactly the same story with the drillers. So what we see is there's a lot of discussion around these subjects, but very little is really coming forth. And unless the operators are willing to support the contractors into this transition, I don't see it happening. In Europe, any fund which is sitting on a $750 million plus book to invest, they are mandatorily required to have an ESG group within. But it's not the same case in the US or the rest of the world. If it's not a priority made by the government, operators are not going to follow it. It's left to their internal protocols. And if there is no cost recovery associated with it, probably we are not going to be looking at it. But to answer your first question, it's really for the drillers, it's not so much about changing out the engines for a particular fuel. It's more about installing hybrid power, as some of our clients are asking for it. But again, if the paybacks make sense, only then it would be done. I don't see it happening otherwise.
How about the OSV sector, Mark? What's your
Well, as you know, Fazel, there has been a lot of investment in the OSV sector in greener power. Various owners have proceeded with hybrid batteries. We already have the diesel electric, as you're aware, propulsion. You add to that the hybrid propulsion, then you have a pretty good decrease in CO2 emission. We have seen that globally, some of our clients, national companies, are looking to enhance their environmental footprint. Even locally, Saudi Aramco's Marine Department has, proceeded with a very good investment in diversifying their fleet into more hybrid power. And as well as most OSV owners are either doing hybrid or LNG powered vessels. So we do see that trend in the OSV sector. As well as you have to look at it from a competitive edge, having hybrid power, or other diesel electric power decreases your fuel consumption, that decreases the cost for your client. So, in a nutshell, yes, we do see that transition being demanded on the OSV sector. Within 5 years, I'm sure we're going to see a bit of an advancement. The problem here is that such a advancement in technology, shipping, it takes 200 years or 100 years to shift from a steam engine to a diesel fuel engine. So in general, I do believe that there's going to be a quick transition now into more fuel efficiency and environment-friendly operation, but it has to start also at the design stage. So, you know, maybe within 5 to 10 years, we can see that shift.
That's interesting because 10 years ago, when I was more actively involved with the operational or the sharp end of the OSV market, I think there was a great appreciation for the diesel electric driven vessels, but no one was willing to pay a premium. I mean, they costed more, right? So it was not a question of total cost or what is the cost of the charter rate plus the fuel saving. It was just looked at your vessel with this charter rate. Why should we pay a premium? Has that changed, or in the last 10 years?
Well, most clients do evaluate now the cost of fuel into their costing. So to answer it, yes.
Oh, progress, great. Right. Now we've had a discussion on peak oil with the Rystad, and I think there's a very eloquent it's a good outlook. And as he said, the several crystal balls, at least DNV and BP both seem to think that the peak oil is behind us. How do you folks see the business of peak oil? Do you see this as a 2025 type issue, or more like the IEA and some of the other forecasts that are still claiming will be 2030 and beyond? Rahul, what's your view?
So what I'll say is, we do in large part rely on the information from those same analysts. So, the perspective we've adopted is to say, realistically speaking, we don't feel it's 2025. It's probably a bit early, but it does fall in, let's say, after 25 to 2030 range, before things start to diminish quite a bit. Unless oil prices stay low, which generates other problems as far as liquidity and survivability, right?
Mark, your view?
Well, you had one of the major analysts on board, and I cannot, I do not have the numbers. I'm sure they do. But yes, I think 2030 should be the the time where we do maybe see peak oil, but you never know. I mean, yesterday in our region, yesterday ADNOC announced a $20 billion, reserve find, and so yeah, it's a tough one, but I'll leave that to the analysts. But I think between 2030, 35 probably.
Rahul, finally, last word.
I'll put it at 2028-29 timeframe. Reason for that I would give is that a lot of outlooks out there have been in the 2030s. There are also some of the more aggressive one in 2025. But if I look at the inventory buildup and depletion, the potential price movements after that, and probably the next settlement after the next spike in terms of pricing, as well as the overall global demand, my analysis and what I've heard from the industry experts would point to 2028, more towards 2029, I would say. Again, if the world rallies behind the 1.5 to 2 degrees global warming targets, stuff like that, it could be even sooner. But I don't see that happening immediately, especially since there is already a lot of shutdowns happening during the pandemic. So 2029 would be my best guess.
Okay, so that concludes our first session on sort of the global picture, and I'd like to move it to the local scenario. And like I said, all three of you play very critical roles, especially in the local market. We've seen that national oil companies in the Middle East have either cancelled or delayed much of the E&P spend in 2020. In fact, this has been happening since 2015. But what looked like there was going to be a change at the end of, let's say, Q3, Q4 to 2019 seems to have reversed and gone back. How optimistic are you about spend now in 2021 and 22? Do you think it's going to remain flattish? since considering oil is more or less range bound in the 50s from your own analysis, what do you think E&P spend are going to be heading back into some significantly more E&P spend, which then gives you guys an opportunity to do better in business? So your forecast for 21 and 22. Doug?
Yeah, so realistically speaking, for our business, 2021 is going to be flat. It's not going to be particularly helpful because we're working off, the things that we're working off in 21 is booked work that we had one that was supposed to have been done this year, and some that was still scheduled for 21. But for the most part, there's not a tremendous amount of new stuff showing up in 21. We are seeing a tremendous amount of bidding activity for 22, 23, and even 24 executions. So it does obviously indicate that there's a large increase in spend post 2021. Now, whether those jobs actually go forward or not is not open to speculation. We seem reasonably confident that's going to happen. However, what I will caveat that with is keeping in mind that the bids are coming to market now. Very short shelf lives on these projects, in the sense that a job that took me 2.5 years to do before, the client's milestones are now, I would say, on average, 6 months shorter. And what you're doing is you're essentially locking in 2020 COVID desperation prices for execution in 2022, 2023. So yes, there will obviously be clients will be spending more money, but I will say that they'll be getting a lot more for their money in 22, 23 than they are today. So
E&P in that sense for 21, 22 should be significantly more than what's happened in 2020, which has been basically flat.
No, I was suggesting 21 will be whatever it is today. It's what it's going to be. They'll be making commitments probably in 21 for 22 and 23. So
that's what I meant. Yes. Okay. So E&P commitments. Fair. Okay. Yeah. Rahul, what's your take?
Again, broadly aligned with what Doug just said. 2021 is already baked in. It's whatever happens is going to be about 2022 and beyond. The sustaining capex is still going to be pretty much the dominant theme. The growth capex is still going to be limited. I don't see, especially since your question was around the Middle East NOCs, I don't see that happening, at least definitely not in 2021, probably in 2022, again, with a pinch of salt.
Sorry, you're talking about contract awards?
Talking about the overall capital deployment for upstream oil and gas in the Middle East by NOCs. Contract awards may happen, but the start date is for all those is going to be 2022 and beyond. The trend in other parts of the world is a bit different. We see a lot of activity and a lot of interest, especially as Lars was mentioning, the short cycle economics is what's kicking in. It's what's really driving a lot of the demand. And thanks for that, because otherwise it would have been a pretty grim situation. And but that can only take us so far in terms of absorbing the capacity. We need the growth capex coming in to really boost the overall industry. And unfortunately, I don't see that happening in 2021. It's probably going to be 2022.
Right. So what didn't happen in 2020, which was new contract awards, is that expected to happen in 2021, or is it supposed to, or will that even contract awards be delayed beyond that?
Everything is delayed. Contracts awards should happen in 2021, probably the second half of 21. But the commencement should be expected in Q4 21 and probably 2022.
Mark, do you share that view?
Yes and no. Okay, Doug is there and he knows that. I mean, let's start with the good news that there has been no major cancellations except one or two major cancellation on EPC side. There has been suspension on rig side, which I think Rahul agrees with me, and there has been suspension on the EPC side, which Doug agrees with me. I'm lucky because I can get both EMP and EPC feedback to you. And so yes, so what happened is just a suspension of a lot of ongoing projects or projects that should have commenced to 2021, and further 2-3 couple of major EPC contracts in Saudi, for example, has been postponed till 2022. But then on the other side, you do have Qatar, which is proceeding. Sorry, I'm trying to describe it for you. So in Qatar, it's still proceeding very well with EPC and ENP, and UAE as well as 1 or 2 major suspension. So yes, 2021 a bit better, but then you do have the COVID-19 aspects. Now, do we go back to work? And then if something if a spread gets some COVID cases, do we suspend that project? It's still a big question mark when it comes to how are we going to operate in that sense. With that, a lot of mobilizations are beginning this month, so we have to wait and see first quarter, second quarter, how it looks. 2022 looks good with the news of vaccines and and other things. So 2022 looks better, hopefully, trying to be positive here, and so on.
True. Okay, so we've seen that OPEC Plus members have struggled this year to try and maintain production cutbacks, production quotas. As I mentioned in my little introduction, the UAE was only able to meet 10% of the quota cut. That means it was 90% over its limit for 1 month in August, and it has caught up a little bit in the subsequent months. But obviously, we've also seen the stress and the strain that this has brought within the OPEC family. Do you think the OPEC members will be able to maintain their discipline and maintain the quota cuts at the detriment of their own economies? Because that's what they've got to do to keep the oil prices at some kind of sustainable $40, $50+ range. So let me ask you, Mark, with the question first. What do you think about OPEC compliance through 21? Do you think they will be able to hold together?
Yes, they have to. I mean, that's the assumption, I would say. The price now hovering around 50. Again, trying to speak regionally. 50 to 60, hopefully. That brings a good amount of capital for the market. I think they will do their best to try to manage the price after what we've been through. Hopefully there won't be any geopolitical tensions going forward again. But yes, I mean, in general, I do see them as maintaining a balance in the market.
So in that sense, just to stay with this question for part 2 of the same question, is with the Biden presidency that now seems almost conceded, and Iran possibly coming back into the market, that will put more pressure on the current OPEC people to even further cut back than what they're doing today. Do you think that's going to happen, and would that cause a possible price collapse if Iran comes back with a couple of million barrels of oil, which is today not there?
I mean, if you remember, Fazel, it was how the Iranian oil came back to the market was you have to say impressive. Everybody was assuming that it's gonna take some time, and then suddenly we see that spike of that oil coming back in the market. So yeah, again, lifting sanctions, we don't know, but if that happens, what's the reaction of OPEC? Would they try to maintain that balance? It's a big question to answer.
Rahul, what's your crystal ball telling you?
Cannot say anything about the Iran angle, because 2 million barrels coming into the market, and especially if it happens fast, how the regional geopolitics is going to play out, it's hard to say. But I would say one thing. If I look at what happened in 2008, 9, 10 timeframe and what's happening now, I see a lot more discipline now as compared to what we had seen in 2008, 9, and 10 timeframe. We, there are a lot more players in the group. So whereas earlier we had barely 11 active participants. Now we see almost 20 plus active participants in this. Earlier there was a 4 million barrel cut. Now we are talking about removing 10 million barrel plus, and we are almost a very high level of compliance within the players who are trying to influence this. Yes, we'll probably we have seen some quota issues in UAE, probably some Iraq and Kuwait as well, who might support the production increases as they are finding it a bit difficult to balance their own budget at the current levels. However, Russia and Saudi Arabia have both signaled their willingness to remain flexible. So overall, I think they understand that the price drop really hurts everybody in the OPEC plus. And some members may violate their quota, but by and large, OPEC should stay committed. Now, with Iran in the play, another additional 2 million barrels, how this whole thing plays out, anybody's guess. But OPEC by itself should keep things in check.
So, Doug, what's your view? Will the 2 million barrels potential Iran oil, that's what they're saying if the sanctions are lifted, would that be the straw that breaks the OPEC camel's back?
I don't think it'll break the camel's back. I think with the, playing on what Rahul has just said, with the number of participants and the discipline that's currently in play within OPEC, I think they would be able to manage it, because I also don't believe that they would try to flood the market to punish Iran, because that just wouldn't help anybody right now. So my impression would be is that if Iran did come back into the market, it wouldn't be so much the amount of barrels that would affect the oil price. It would be the psychological fact of, oh my gosh, Iran's coming back onto the market. I think as far as the production reality of the situation would be, they would be able to manage it with that kind of volume.
Okay. Kevin, I see you back in the screen. Does that mean that we're signaling a move towards the audience?
Exactly. Yeah. I mean, we're almost out of time. So there's a couple of questions which have come into the audience from the audience, which I'd like to ask. They're both on the macro side. Lars mentioned the possibility of peak oil. Initially, he said to 2028. He then moved it forward to 2025. And thereafter, on his graph, you saw quite a substantial decline in the demand for oil. Other studies show a peak and then sort of steady demand for several years, because obviously there are different geographical areas with different demand scenarios and things like that. And I was just wondering from the panelists, what they feel. I mean, after peak oil happens, whenever that may be, are we likely to see an immediate start of a decline, or may it just peak and stay there for a while and then decline several years later? Doug, perhaps first.
Yeah, I think my feeling would be is you would see a peak. You would have a very gradual decline in the first several years, and then it would start to drop off a bit later on, but then stabilize. I think we can all recognize that that oil and gas, hydrocarbon-based energy, is going to be around for quite some time. Obviously, not at the same demand level, but that's my impression. It's not going to have a steep peak and valley.
Exactly. Now, I guess the reason is because there's a massive difference, isn't there, between the Western world and the sort of developing world in terms of sort of technology and available finance to sort of bring into play renewables and things like that. Rahul, do you have a similar opinion?
Yeah, my view is that I was putting peak at around 2028, 29. I would think that right up till 35, it's gonna remain pretty flat. And then you'll see a gradual dip. Different sectors have a different kind of a decline rates going forward. Whereas you'll see power and heating go down by almost 8% year on year, you'll probably see transportation going down only 3%. And there'll be an offset effect as well. So I think that it's probably going to follow the what had happened to coal in the past. The production didn't disappear, fall off the cliff. It just remained flat over a long period of time. That's what we should see for oil.
Okay, thank you. I'll ask another question, and I'll start with you, Mark.
Kevin.
Sorry, go ahead.
I'd just like to make one comment. Somehow we talk about demand and the world peaking with its current capacity, but somehow there's almost 2 billion more people coming into the world. We're expecting about 9 billion people in the next 20 or 30 years. So there's a net growth in demand just by having more mouths to feed, specifically in India and in China. So that's a bit of an offset. It's not just per capita consumption that's going down. It's also a little bit of just having more mouths to feed, and therefore aggregate demand going up, which is a factor that would sustain what Rahul said, that there might be a peak and then there'll be a plateau before there's an actual decline. And it may not be more oil because that oil is being used, but by more people.
Exactly. Yep. Okay, let's go on to our final question, and I'll start with you, Mark. The question is, could oil see a short-term spike once the vaccine is rolled out and travel and leisure starts to return, or at least the perception of it starts returning? And the person asking the question is a bit like the global stock markets at the moment. So, I mean, is there scope for a spike sometime over the next 6 months, let's say, in the price of oil?
Yeah, I mean, but the spike can come, but then you have a lot of storage available as well. Don't forget that. So as of now, it is balanced, and OPEC Plus is reacting pretty well to try to mitigate the risk of a huge volatility in the oil price. But yes, of course, the more we hear good news, and hopefully we always hear it, the more we see the price rising. I mean, $7-8 within a span of 5-6 days, I believe. So there will be a spike, but then the element of supply demand will come into play and balance that. Consumers do not want that high price, and as well as producers do want to maintain that price, so to please their customers. So maybe a bit of a spike, but then it balances. That's my opinion.
Okay, so Rahul, do you have the same response? I mean, for example, is the price of oil more to do with fundamentals rather than to do with speculation?
Oh yeah, absolutely. We have moved far away from speculations. The 18th, 19th of every month, as you are balancing out contracts, you'll see some speculation happening around it. But by and large, with the inventories and the pace of demand not seeing any major shocks, plus what we have also seen is in the last quite a few years, even the geopolitical tensions don't drive the price that much up or down. It's more to it's left to a fundamental demand supply equilibrium that's driving the prices. So I'm kind of the same view. It's not going to send any price shocks anywhere one way or the other.
Okay, and finally, Doug, any spikes in the next few months?
No, I'm just not inclined to believe there's going to be a tremendous spike over the next few months in the oil and gas price. It'll keep, as I previously mentioned, I think I see it going up a bit as the vaccine comes out and there's a bit more optimism. But I think I said, mid 50s or so, it'll get up to there and hovers to a certain degree.
Okay, perfect. So we're out of time, I'm afraid. That's the end of our first session. I'd like to thank all of you, Fazel, Doug, Rahul, Mark, and Lars earlier on for the presentation. This session has been recorded for those who have registered and didn't hear it live. It'll be on our website within the next day or two, and you can listen to it again. So that's the end of session 1. Our next session is in 1 hour from now, and the topic is shipping crystal ball for 2021. Thank you very much for joining. Goodbye.
Thank you.
Thank you, everyone.
Thank you. Thank you.